Hey everybody, Boris, Forex. Welcome to the weekly technicals for the crosses for April 23rd to April 27th, 2018. And it's kind of a very interesting story on the crosses because there's, to use a bad pun, a lot of cross currents going on. But I think one of the more dominant themes that's starting to take shape as we enter into the new week is the weak euro story. And if you're going to bet on a weak euro story, there's actually sort of a interesting out of the box idea that I had for short euros, which is short euro yen, not the trade you would think would be the most obvious one, only because if we're long dollars and we think dollar yen goes up, why would that trade work? Well, the basically thesis behind this particular trade is that the deceleration in the euro is going to be much faster than the acceleration in the yen. We're still having a hard time running through the 108 move to the top side, while at the same time euro seems to be ready to really crash that 22 level. So when you look at the charts, the euro yen chart looks like it's just ready to kind of fall over. The next interesting idea is a variant on the yield compression theme. So Aussie Swiss, which has been the darling of high yield trades, because obviously it's probably one of the biggest yield differentials in the G11 universe, which is that you have Aussie at a very positive yield and a Swissy at a negative yield. So the carry trade there begins to unwind as everybody begins to liquidate their long Aussie positions. And that looks like it's ready to come down all the way down towards the 74 handle. This is really a trade on US yields going up through the 3% level. If we see that, I think the unwind of the carry via Aussie Swiss really picks up steam. You already see very strong signs of it on the charts. I'll show it to you in a second. And that that trade makes sense. And then the other sort of a slow burn or slow turn to the downside is the CAD yen idea. Now this is problematic. I'll be the first one to admit to you. This could turn very, very quickly to the upside if we get positive CAD data. So this is a trade you could actually look both as a potentially near-term short or as a surprise long, as a squeeze short long that could really work very well for you. Let's take a look at the charts here and just see what I'm talking about. And let's start first with CAD yen. So CAD yen, giving up the upward channel, but still kind of holding right above the 20-period SMA. Positive news on Canada could certainly flip this whole trade around, but negative news just kind of kills it, because I think, again, the story here of selling loonie becomes much stronger than the idea of buying dollar yen. So this could easily go down towards the 84, maybe even 82.5 level before it finds any kind of a support. And what you're seeing on the charts right now is certainly the upward momentum has been lost. We still are waiting to see if support can hold it around these levels. But this is just one of those kind of binary trades where if you get positive news, I think it really flips itself around strongly. If you get negative news, that means there's no progress on NAFTA and it looks like they may not be able to come to a deal. This just kind of falls off a cliff because it is very, very negative loonie. The next trade is the Swiss trade, which is the yield liquidation, the carry trade liquidation trade. And you can see that's a very, very clean fall out of the upward channel. You can see that we're just like sort of right on the edge here of giving up this support level, and the next level comes into 74. And that's granted it's a slow moving trade, but it's a pretty clean looking fall out of the buy zone. When you look at the chart here, what you see generally, not always, but generally, is that this follows this pattern of like when they want to liquidate the carry, generally maybe you have some retraces, but it rarely peaks much above the prior highs before liquidation happens, and it may take a couple of waves for it to happen. This time, I think actually the liquidation could be sharper because I think the acceleration in U.S. yields could really pick up, and when that happens, this carry trade becomes really much more sold off. Same kind of a thing here, where you kind of falls out of the buy channel, and then it just becomes very quick move to the downside for about 100 points. 100 points in this particular pair, obviously huge amount of movement because it's a very low volatility pair. And then the last but not least, another one of sort of my surprising, I think, thoughts is this euro yen, which is not the most common thing that you would think of where you want to short the euros, But it does look to me, again, this is sort of a relative weakness trade, that the euro sells harder than the yen gains. And even if conversely, if the yen declines, then the euro may not just rally. In other words, if there's some sort of a surprise on the U.S. side, it's unlikely that given all the negative news around the euro is going to have a massive anti-dollar move. So the fact that we're closing on the lows of the day, big flame out candle out of the buy zone, just inching to go towards support here at around 131.50, suggests to me that this is an interesting turn trade to the downside as the market gets ready to sell euros hard. Wish you guys the best of luck, the best of trading. Those are the best cross ideas I have. I'll see you guys next week.